All right, let's go to this conversation now. The South African financial sector remains stable and well capitalized. That's according to the Reserve Bank's biannual financial stability review, which was released today. Now, however, the review notes that the risks to financial stability remain elevated as raised in the bank's May 2023 report. But overall, however, the Reserve Bank Governor Lesetja Kganyago saying that the financial sector remains in good shape and has sufficient financial buffers to deal with any shocks that may come their way. But let's get more. I'm not alone. My colleague Nompumelelo Siziba joins us now. It's so good to have you in studio. We hardly have you here. It's really good to have you. Let's talk about some of the risks, Nompu, that the Reserve Bank is talking about here.
Yes, so the Reserve Bank is talking about the main, not the main risk, but one of the risks that they really elevated was the issue of government debt, the fact that that has increased, and also debt servicing costs have risen. So the government finances are not in good shape. And then the other issue as well is obviously some of the structural impediments that we have in the country, issues around logistics and electricity. Yes, they see that electricity supply is likely to come up given the number of megawatts that have been approved by NERSA, but still today, for example, we see that we're living in an age of stage 5, stage 6. So that is still a volatile space that we're in. They also talk about the fact that we continue to be grey listed under the Financial Action Task Force. That has basically increased the costs of financial institutions because they're under much more scrutiny when they deal with their financial counterparts overseas. So that creates problems. And if that is prolonged beyond South Africa's 2025 deadline, that's seen as a key risk because then it means that international investors wouldn't see us in the best light. So that's among a few, yeah.
And when you think about, rolling blackouts, a lot of South Africans already have quite a number of things to say about that. But there's something else that people don't think about, and it's the fact that when you think about government debt, there are serious risks to, the financial system, but people may not be aware as to what does this mean then, and what are those risks at a practical level.
Yeah. So the Financial Stability Review looks at the healthiness of the financial sector, right? So what's happened over the last decade or so is that increasingly foreign investors have divested, that is, they've stopped investing in South African equities and bonds. Bonds is the key one because they tend to invest in South African government bonds. So what has happened in recent times is that our local financial institutions have sort of ramped up the amount of South African government bonds that they have. In fact, they've bought them at a greater pace than all their total assets that they have on their books. So they have greater exposure to South African government debt. But at the same time, our government is not doing well fiscally. We know that, they're trying to cut the budget and so on and so forth in order to be able to meet up with their debt and trying not to overextend themselves. So there's greater risk. And what's been happening globally, not just South Africa, is that government bond yields have been going up. That is the interest rate that people are willing to pay to the interest rate that people want to receive has gone up because they see it as a higher risk to invest in your bonds. So those yields have gone up. And so because the yields have gone up, the price of the bonds have actually gone down. Right. So what happens is now that because the banks are more exposed to government debt, because the yields have gone up quite substantially, there might be a situation where these financial institutions actually lose because they bought the bonds at a lower price, at a higher price, and then the price of those bonds will come down because the yield is higher and the price of the bond is lower. So there's a risk that these banks may be exposed to losses if they try to sell or pass on those bonds. So that's the risk and it's not just our financial institutions, it's also what they call non-financial corporates, the likes of pension funds, insurance companies that have also taken on more South African bonds. Remember, it's attractive, right? Because if you're going to invest in a South African bond, you're going to get a yield of 12%, which is great. But then there are risks because of what I've explained. And also what happens if government really is faced with a situation where it could default because of this situation of not having enough money to take care of interest as well as its priorities.
Sure. And Nomps, I mean, one of the things that we then are looking at here is also this, we've stayed on this grey list for longer than planned. I mean, a number of people thought by now we would be saying this is over. So what are some of the risks associated with that?
Well, the risk basically is that so our deadline, government wants us to be off that grey list by February 2025. And it's got all the stakeholders to get involved. That is the banks, the Reserve Bank, everybody else, to be involved to ensure that they tick all the boxes so that they can get off the list by February 2025. Should we go beyond February 2025, it means, number one, that the banks continue to be exposed to greater scrutiny when they're dealing with their financial counterparts overseas, which has cost implications. And secondly of all, it means that obviously people are going to view us differently, because now if we can't get off the grey list come February 2025, maybe we'll go towards the blacklist, which is not great. And that means that we'll become an unattractive place for investment. So this is the huge risk. And of course, South Africa needs all the investment and trade that it can get because of the many socio-economic woes that we have, namely high unemployment, inequality and poverty.
I know we're out of time, but how are the households looking very quickly?
Households, of course, because of the high inflation, high interest rate environment, and we've heard the expression that rates are going to be higher for longer. Because of that, there's an expectation that households and businesses are going to struggle. Already, there is evidence showing in the system that there's a higher level of what they call non-performance loans, where people are not able to pay back on their debt in good enough time. And there's a concern about that. But it's not at that level where the Reserve Bank is concerned that there's going to be a systemic risk, but they flag it as a potential risk. But they say that the banks are doing quite well in talking to their clients and working with them to put them in a position where they can pay back the money over time. So they're not worried about it, but they're flagging it.
Okay, Nomps, thank you for stopping by. I hope we see you soon.
Thank you.
That was my colleague, SABC News anchor Nompumelelo Siziba.